We're going to do some gold analysis as well, because one of the guys, including myself, had put in some trades on gold, because gold looks like it's about to do something interesting. What was I going to look at? Let's look at the TGA. We haven't looked at that in a while. This is going to be the Treasury General Account as well. Aha. See? Look at this. Makes sense. June 23. Sideways. February. Look at this. Interesting. Okay? Look at this. We haven't looked at this in a while. So this is the TGA, Treasury General Account. Okay? So this is literally the Fed's bank account. The Treasury General Account. It's their checking account. They load this up with liquidity. And then whenever the Treasury feels like it, they can dump this liquidity into whatever they choose to dump it into. But typically this money would find its way into markets or into the economy, therefore pumping assets. So as the Treasury General Account gets depleted and they inject this liquidity into markets, into the economy, into other things, this money makes its way into risk assets. This is bullish when this chart's coming down, right? So let's take a look. Right after COVID, so COVID happened March of 2020. So look at this. I'm giving you guys fucking alpha. So, boom, right here. Look, right here. March 2020. This is exactly when COVID came out. Boom. What happens the moment COVID came out? Bang. Epidemic, pandemic, whatever the fuck. They absolutely load the fuck up in the Treasury General Account. So they printed a fuck ton of money to try to basically stimulate the economy because everybody was shitting themselves. So you see this massive spike in the Treasury General Account. So the account got up to $1.8 trillion balance. It's the highest that the Treasury General Account balance has ever been, by far. By fucking far. This is also why I said the bull market conditions after COVID were the most perfect conditions possible, because there was so much liquidity that got injected. They basically doubled the monetary supply in a year, which is insane. So there's insane inflation. So as soon as COVID happens, they pump this shit up to a $1.83 trillion account. And then what happens? When was the bull run? When was the last crypto bull run? Altseason was May 21 and November, December 21. Well, let's take a look. Right? Look, nuke from here, April, May, June. Right? Last alt season. When was the other alt season? December 21. Nuke, alt season. Interesting. Who's showing you this alpha? Is anybody showing you this alpha? No, it's just me. Okay. So they basically took $1.8 trillion and injected literally over $1 trillion into markets and the economy. Over $1 trillion. Okay. June 23. That's whenever we started pumping when? June 23. So June 23 is when they injected liquidity. What happened right after? Pump. Where's the TGA? Okay. Then they restock the balance. Okay, this is all 2024. February 2025. Big nuke. Uh-oh. Last time we had a big nuke, we started moving up, right? Big nuke into February of 25, nuked it all the way into April 25 last month. What started happening all of a sudden, end of April, beginning of May? Prices start moving back up in assets, risk assets. They injected this liquidity into whatever it was. We don't know exactly. I mean, maybe you could find it, but we don't know exactly what they injected that liquidity into. But that money made it back. It made its way back into markets. Whether that was they injected that into bond markets, which I believe they did, or actual markets themselves. Who knows? But they injected liquidity, billions of dollars. This was up at 824 billion down to 300. So that's $500 billion. $500 billion that got sent out of their checking account into providing liquidity, probably likely to bond markets, because China and those nations stopped buying the bonds. Okay. So it was likely the bond market where that liquidity got injected into. Okay. This is huge because now we're seeing that effect in financial markets. So if we start to see this move back down again and nuke it back into, 40, 41 billion, huge. Okay. Because down here, 41, that's a massive move, because this was from 800 down to 300. So that's 500 billion. And then 500 billion back down into 50 would be another 500 billion. It's $1 trillion of liquidity that just got injected. $1 trillion. That's a massive, massive move. If we can get it down into like here to these lows again, take out these lows, maybe even take out these lows, right? Huge. So you can see that this is why I also have been bullish, because this administration, what Pompino and these guys are doing is they're trying to inject liquidity into the bond markets and get these markets liquid again so that the yields can come down. And so then they can pump risk assets, right? And so you saw that happening. Now that's a form of backdoor QE, okay? Injecting liquidity into bond markets and into these other markets is it's a backdoor form of QE without actually doing official QE, which is quantitative expanding or expansion. So right now we're actually in QT. Now we did cut down on the QT. We cut it in half from one of the last FOMC meetings. Okay, so we're right now in a state of quantitative tightening, which is taking liquidity out of markets. It means we're selling and taking money out of markets. As soon as the Fed stops QT altogether and continues with this form of backdoor QE, that will send markets higher. They're providing liquidity into markets, allowing prices to move up. Okay, so this is very strategic what they're doing. They're doing this on purpose. So that you see them taking money out of this Treasury account, ejecting liquidity into the bond market, making it more liquid because China and these other nations have stopped buying our bonds because of the tariff war. And as things subside and things cool down and they start coming back to our bond market, risk assets rip, because it'll bring the price of, or it'll bring the yields down on bonds, okay? Which we want. We want bond yields to come down to be bullish for risk assets, okay? This is good to take a look at. So everything is trending in the right direction, right? You see the Treasury General Account nuke, we start pumping. You see M2 pump. You see risk assets pump. Okay. All of this makes sense. All of this is confluent. This is not by accident or by mistake, or they just so happen to be trending in the right direction. No. This makes sense. This is exactly what's supposed to be happening. Okay. So we love that.